Hey, welcome back. Today we're going to pull back the curtain on a trading pattern that, honestly, hides in plain sight. It's this incredibly powerful clue that can signal a huge shift in the market's direction. So let's just dive right in.
I mean, that's the million-dollar question for any trader, isn't it? You're watching a strong trend, everything's going great, but you know deep down it can't last forever. So, how in the world do you spot that exact moment when the tide is about to turn?
For a lot of people, the go-to answer is the classic head and shoulders pattern. You know it, I know it. It's like page 1 in the trading textbook for spotting a reversal. It's famous, it's pretty reliable, but it is not the whole story. And that's because while everyone's looking for that perfect symmetry, they're completely missing its powerful and, yeah, kind of crooked cousin, the Quasimodo. And as we're about to see, sometimes this lesser-known pattern gives an even clearer signal.
So let's put this overlooked clue right under the microscope. We're going to break down what it is, how you can spot it, and most importantly, why it's such a valuable tool to have in your back pocket. So, at its heart, the Quasimodo, or QM pattern for short, is a reversal pattern. You'll find it creeping up at the very end of a strong, established trend. And when you see it, it's basically a big warning sign that the market might be about to do a complete 180.
But to actually use it, you've got to know what you're looking for, right? The Quasimodo has this really distinct, almost lopsided shape. So let's break down exactly how it gets built piece by piece. Okay, let's walk through a bearish Quasimodo. That's the one signaling prices might be heading down. It unfolds in 5 key moves. First, you have an uptrend that makes a high. That's our left shoulder. Then it pulls back to form a low point, a trough. Easy enough. Next, the price pushes up to an even higher high. That's the head. Now, this next part is the real tell. The price pulls back again, but this time it creates a lower low. And finally, it rallies one last time, but just runs out of steam before it can reach the head, forming a lower high. And that's our right shoulder.
And the bullish version? Well, you just flip that whole picture upside down. Seriously, it's the exact mirror image. It shows up at the end of a nasty downtrend and signals a potential move up. Same logic, just in reverse.
But look, this pattern isn't just some random shape on a chart. It's actually telling us a story about what's going on inside the market's head. It's a visual of a power struggle playing out in real time. Think of it like a tug-of-war. For a bearish QM, the buyers have been winning for a while, just pulling that price higher and higher. But this pattern shows you the exact moment they start to lose their grip and the sellers start to take control. It's the tipping point. So this funky shape actually reveals 3 really important things. 1, trend exhaustion. That push to a higher high, followed by a failure, it shows the bulls are just getting tired. 2, hesitation. When that second low point drops even lower, that's a huge crack in the trend's foundation. And 3, a clear shift in power. Once the pattern is complete, all the signs are pointing to a reversal. Okay, I know what you're probably thinking. This sounds an awful lot like a head and shoulders pattern. And you're not wrong. They're definitely related. But there is one crucial difference that, believe me, changes everything.
The one defining feature you need to look for is the neckline. In a textbook head and shoulders, when you connect the 2 troughs, you get a more or less horizontal line. It's flat. But with the Quasimodo, because that second trough is lower, you get an angled line. It's sloped. This is the single biggest visual clue.
And why does that matter so much? Because it completely changes the trading rules. With a head and shoulders, the standard play is to wait for the price to break below that flat neckline to enter. But with a Quasimodo, the theoretical entry point comes way earlier, often right as that right shoulder is forming. Different shape, different rules.
So, with that in mind, how might someone theoretically build a plan around this pattern? Let's just walk through a basic framework. And of course, quick reminder, this is all just for educational purposes, not financial advice. Okay, for a bearish Quasimodo, the theory goes like this. You'd look to open a sell position right as that right shoulder is taking shape. To manage your risk, you'd place a stop loss just above the head, the highest point of the whole pattern. And for a take-profit target, a logical spot could be right around the level of that second lower trough. But here's the thing. Just spotting the pattern isn't enough. It's only half the job. Because as any trader who's been around the block will tell you, a pattern without confirmation is really just noise on the chart. You gotta have more evidence. So smart traders will look for other clues to back it up. A really popular one is called divergence. This is when the price makes that higher high at the head, but a momentum indicator, like the RSI or MACD, makes a lower high. That disagreement is a huge red flag that the upward push is losing steam. Another great tool is moving averages. A cross, where a short-term average dips below a long-term one, can also add weight to the idea that the trend is shifting. All right, let's wrap this all up. We'll go over the key things to remember and, just as important, the common traps that people fall into when they first start spotting this pattern. So here are the big mistakes you want to avoid. Number 1, ignoring confirmation. Don't just jump in because you see the shape. Number 2, being impatient and entering before all 5 steps of the pattern are actually complete. Number 3, getting it mixed up with a head and shoulders and using the wrong entry strategy. And finally, and this is huge, not paying attention to the overall market context, like low volatility, or just failing to use solid risk management. So here's the main takeaway. The Quasimodo pattern is a seriously powerful tool that, for whatever reason, just gets overlooked. It gives you this unique way of seeing potential market reversals, a totally different perspective than its more famous cousin. And trust me, once you know what to look for, you'll start seeing it everywhere. Which really just leaves us with one final thought to chew on. Now that you can spot the unique, crooked story of the Quasimodo, what other subtle narratives are the charts trying to tell you? Thanks for tuning in, and we'll catch you on the next one.